Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 7th, and this is the weekly market update. Of course, the disclaimer, content in this video is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. All content in this video is information of a general nature and does not address the circumstances of any particular individual or entity. That means you guys that are listening. Nothing in the video constitutes professional and/or financial advice. I am not a financial advisor. Nor does any information on the video constitute a comprehensive or complete statement of the matters discussed or the law relating thereto. Basically, it's your money, so it's your responsibility. All right, this week's reality check. As we go to do this at around 11 o'clock Central Time, I have seen that the Associated Press, NBC, Fox News, and CNN project that Joe Biden has won the U.S. presidency after factoring the latest batch of votes this morning. Very contentious, very interesting election. This is probably going to go on for a while. I don't anticipate that President Trump is going to just go along with this. There's going to be court challenges. They've already had some. They've been struck down. There's allegations of voter fraud. I'm not going to get into all that. For our purposes here, it doesn't really matter. As I've said before, tails I win, heads I win, tails I win more. Doesn't really matter. But there is definite evidence of electoral fraud in several jurisdictions. Is it sufficient enough to change the outcome? Is there any appetite to have a big fight over it? And like I said in the previous when I talked about the election, pre-election, my forecast, you're going to go take it to the court system for the judges that are from the establishment. Look, the establishment in this country never thought Trump would win. The country's ruled by an oligarchy, and you have this illusion of this two-party system. He got in there by chance, and they were going to make sure that he didn't get reelected, whatever they had to do. So we had 4 years. The guy never, against the odds, you have to say one thing about the guy, whether you like him or not. He stood in the breach and took all the incoming fire. He was under constant undermining from people in his own administration, the bureaucracy, the media, the opposing party. It's unprecedented in American politics. What I think the net result is, though, is what you have to understand is that it's not about him. His election was a manifestation, as I've said before, in my view, of tens of millions of people and their frustration with the system. And they fortunately still believe that they can change things through voting. I would suggest that they're going to be dissuaded of that view over the next few election cycles. As I've said before, if you are sitting back thinking that electing a politician, especially a president or members of Congress, is going to change your life in any material way, you are sadly mistaken. But, you can believe whatever you choose to believe. Like I said, I don't think that if this stuff even makes it to the Supreme Court that they're going to want to get involved. Look, you get a certain amount of inertia and momentum, right? And people get tired, and people have to work, and people have other things going on in their life, and they may not like the result. Half the country isn't going to like the result. And, what are you going to do? I'm not going to go protest. Most people are not going to go do that. They're just going to move on and do the best they can. And like I said, overall, it's not going to have that much effect on most people's lives for the average person, one way or another. Because, like I said, the drain the swamp thing, it just wasn't going to happen. It's too entrenched, the bureaucracy. It's just not, nothing that one person or, a few people in the administration that are there for 4 years can do. That bureaucracy's been there for 200 and something years. So let's go over some winners and losers real quick. Who are the losers? Well, the pollsters. I mean, the polls were way off again, but you have to understand something. I mean, my view on this is that the media, you know, was in the tank for the Democrats. They've always been. Most of the people in the media, it's part of that oligarchy, part of that establishment. They're in the tank, and they're going to go out and tender for polls and ask people, pollsters, to go do polls, and you're only going to get paid. You're only going to be given those contracts to be a pollster if, in fact, you're delivering the preordained results. Those are not really polls. Those are propaganda, agitation propaganda in order to sway people's views or to demoralize the other side. But the people still came out and voted anyways. And so we have 2 election cycles in a row where the pollsters look like total idiots. So you can either say that that's the case, or you can say that they just the way that they do polls is broken. They're just stand-up people, and they just got it wrong again because their methodologies are wrong. No, their methodologies are quite correct, and they're not there, like I said, to measure sentiment. They're there to create agitation propaganda. It's funny because Nate Silver, he had a tweet out. He's the guy that's at one of the famous pollsters that got it wrong two cycles in a row, and I guess he's moved into the financial forecasting or whatever now. And some wag commented that now that Dennis Gartman has retired, Nate Silver will be the new Dennis Gartman. And for you guys that are in on the joke, Dennis Gartman is famously known as a contrary indicator. So when he would come on CNBC and say that a commodity was going to go up, then people would short sell it, and if he thought commodity was going to go down or the market was going to go down, people would buy it. He was known as a reverse barometer. So I don't think Nate Silver got the joke, but the joke's on him. Who are the other losers? Well, the American people. Nothing's really going to change for the majority of the middle class. It's going to now, the oligarchy got what it wanted. You're going to see more intense immigration from, third world countries, which are going to undermine wages, lower labor costs, create a permanent underclass and more Democratic voters. You are going to see China, all the work that was done to try to make trade fair, that's going to go away. The Republican Party is dominated by the U.S. Chamber of Commerce, which is in the tank for globalism. And so, this is why I say you better have your act together, because these people don't have your back. They, whether you believe the allegations that were on the Hunter Biden laptop or not, all these politicians are in the tank. They're all there. I mean, how do you go into politics with no money, nothing really going on? You don't have a business, and most of these people come out and they're multimillionaires. I mean, really, that's why they're in such derision. That's why people. But it's kind of like the school system, right? Everybody, you ask the soccer moms and people out in the suburbs about school systems, say, well, schools suck, except for my kids' school's pretty good. That's just how people are. They have this bias towards, politicians suck, but my congressman's not that bad or whatever. That they have that bias. And another big loser is Nancy Pelosi. This was supposed to be a blue wave. We were going to blow Trump out, and they were going to retake the Senate, which I think is still has not been determined yet. And instead of having a blue wave and having more seats in the Congress, the Democrats lost seats to the Republicans. And I think a lot of it had to do with a lot of the craziness that's been coming out of that chamber on that side of the aisle for, a couple years now. I mean, there's, a lot of people just think they're nuts. I mean, you see it now after the election. You have some of these bomb throwers like AOCs, we have to hold people, we have to have a truth and reconciliation. We have to find out who the Trump sycophants are, and they have to, then you have these, it's Twitter, I get it, but still it's nuttiness, and most people don't like nuttiness. There are the hardcore people on each side, but the average person doesn't like to hear that they're going to be put on a list, to be re-educated. So as part of a truth and reconciliation program or whatever. So who are the winners? Well, populism. I think that the traditional Republican, Democrat oligarchy is starting to get chipped away at. You're starting to see more populism, whether it's from the left or the right. And I think you're going to see more of that because these large institutions like the federal government and even many state governments, they're not meeting the needs of the people. And the people are frustrated and they have no outlet for their anger. You elect people, you want them to go there and change, and they go there and they get changed. They get pulled in to the you're there, and if you want to have any kind of, if you don't want to be ostracized, you have to toe the line for whatever your party is doing. You're not there to do the bidding of the people. You're there to do what the lobbyists and the people that drop money in the sock for your reelection tell you to do. That's just the nature of it. That's my view. You may disagree. I mean, are there really people that think this is like Leave It to Beaver civics class, that Mr. Smith goes to Washington and all that? Do people really believe that? I mean, if you do, then I don't know what I can do for you or what anyone can do for you. You really need to reassess your grip on reality. That's not how things are. Those people are not there for you. They're there for themselves. A certain kind of bedbug and personality type is attracted to that position. Whether it's Trump or Biden, that kind of person that wants to be in that job is probably the kind of person that shouldn't have that job. But we've derated this now to a NFL football game, so it's my team against your team for the win, and 50% of the vote plus one person allows that group to tell the other group what to do. I don't know. I don't think that's a long-term sustainable system. Well, the oligarchy wins. Look at the people that gave money to these campaigns, and you'll see who they answer to. It's the oligarchy. Nothing's going to change. Speculators will win. People like myself. This is great. Look, both sides are going to spend money. We're going to have big spending programs. What I'm interested to see is if COVID still is maintained as this end of the world scenario, we're going to have more lockdowns, or if this thing slowly fades away as we move into 2021. That's what I want to see. Who's another winner? Well, modern monetary theory. That was on its way in anyways. I think that gets accelerated. It's the perfect system for a group of people that want to spend money for political purposes. Who else wins? Those in line to get the newly created trillions first. That's the part of the oligarchy, your Wall Street Sharpies, who get their hands on the newly created money first and then use it in the financial markets to make themselves wealthier. I think one of the things I think is interesting, it won't happen, but I think it's time. The country is so divided. The values that groups hold here are just not the same. And I think it's probably time to discuss an amicable split. You have 330, 340 million people, different ethnic groups, different regions with different value systems, and both do not like each other. There's no really chance to reconcile the views and work together. I think the best thing to do would probably be consider having a amicable split. Will that happen? No chance that that's going to happen. But with all the problems that we have that are not going to get fixed, regardless of who's in there, I think that would be the best thing to do. I mean, my view has always been and continues to be that we're accelerating towards a complete collapse of the system. But I still think there's time to have an amicable split and have a controlled demolition. But that's probably, not going to happen. Change doesn't really happen until it's forced upon people. They don't really change until they feel pain. And right now, it's free money. So, and I think that people aren't going to be interested in having this. And then I think the problem is that when the change does come, it will become very quickly, very violently, and with a lot of disruption. But that's my view. So, Variant Perception is a research firm. They came out with this. It's getting a lot of play on Twitter. One slide from this, I'll put a link to their site. You have to register. You can get their download of their presentation. It's basically what we've been talking about on this channel for the last year. the new dawn for commodities. I just took the one slide here because I didn't want to violate any copyrights too bad, but we're on the cusp of a new commodity cycle, and there are three big secular drivers that they say for this super cycle. Number one, the long era of monetary policy dominance is over, leading to a heightening of inflation risk not seen since the 1960s. And what they're talking about there is what we were talking about. You know, the standard prescription for recessions by these governments and central banks has been cut rates. You know, and you can see over the last 20 or 30 years, that's been the prescriptive device for these recessions. Let's just cut rates, get money into circulation, and the economy recovers. Once inflation starts to tick up, we start raising rates, rinse and repeat. Well, that's over with now because we're at a permanent era of low rates. And so your ability to just do that is now constricted. And so the next model that we continue to see, and we're starting to see manifest, and will pick up speed in my view, and why it will be inflationary, this era of money creation, is because prior to now, we haven't had direct transmission into the economy of the newly created funds. That's going to change via infrastructure, via, Medicare for all, via UBIs, whatever they come up with. Could be tax cuts. Whatever they come up with is going to be direct to the economy, and I think that's going to be very inflationary, because just using monetary, that's just cutting rates and creating money and having QE, it's pushing on a string. It doesn't get transmitted into the economy. Secondly, investors are deeply underweight and will need real assets such as commodities as a hedge against inflation. That's exactly right. We've pointed this out over and over, that the weighting of commodities in portfolios is basically at an all-time low. The percentage of resource stocks or energy stocks in the S&P 500 is at an all-time low. Exxon got tossed out of the Dow. I can go on and on. There's a lot of signals out there. So growth stocks are in, growth forever, uber alles. And, we don't need any of these dirty mining and oil stocks, ESG and all that. And number three, commodities are generationally cheap, both compared to themselves and to other assets. We've went over this, but I think it's a good presentation. It's about 40 slides. They go into a little bit in depth. They talk about some of the same things I've been talking about. And they talk about real rates being negative for extended periods of time. That's another, driver of this next cycle, in my view. Good presentation by Ron Stoffel. He's the guy that does or part of the organization that does the annual In Gold We Trust. And he had a recent presentation, link in the show notes. All roads lead to gold. And what he talks about is like I said, some of the same things we're talking about here. We've been talking about physical stimulation and price inflation, fiscal being going to be the next tool that governments use to try to get these economies going. Create money out of thin air, create a lot of debt, and push that money into the economy, creating price inflation. Radical ideas are on the lead. What are we talking about? MMT. You better become acquainted with Stephanie Kelton and her book, The Deficit Myth, or go look at Eric Townsend's interview with her on Macro Voices. I will put a link to my new website, the investment letter curation site I created, and all this stuff is there. You can go there and just click on these things, and it will come up like MMT or whatever, and it'll give you the articles, videos, whatever, and you can get yourself acquainted with this. Because as I've said before, it doesn't, this offends all of my hard money Austrian economic views. This idea that you're just going to print money and everything's going to be wonderful. But it doesn't matter what I think. It only matters what's going to happen. And so you have to prepare yourself for what is, not what you want. So a lot of people can't get over that. And that's why they're not going to do well, because they have biases that preclude them from looking at things for the way they are, not the way they want them to be. And most people, unfortunately, are like that. Will the vaccine help? I'm just giving you a little bit of quick update of what he's talking about. Basically, there's this view that we're going to get all these vaccines. The vaccine's going to come in. for COVID. It's going to make all of our problems go away, and then all this uncertainty is going to dry up, and gold's going to collapse. I don't see that happening. It doesn't really matter if they get a vaccine or they don't. They've never had a vaccine for COVID RNA type viruses, but maybe that will happen. There's a report out of Denmark just this week that it was at a mink farm, a human to mink transmission. The virus went from the humans at the farm, I guess, to the minks. It mutated in the minks and it went back to the humans, and now it's a new strain that isn't even being talked about with these vaccines. So that's what these things do. Viruses are going to virus. They mutate, they change. That's why the flu vaccine, the influenza vaccine's not, it's not 100% every year. It's new strains. They try to figure out what and get ahead of it. It's going to be the same thing with this deal. Negative rates and institutional investors. We've talked about this before. We are in an era that's going to last a long time of negative rates. The typical 60-40 stocks bond split is going to get annihilated. If you are owning fixed income securities over the next 10, 20 years, you're going to get killed. I've talked about this before. They used to call bonds in the high inflation era of the late 70s and early 80s certificates of confiscation. Okay. And, or as Jim Grant calls it, return-free risk. And if you buy a bond, a 10-year bond that's paying less than 1%, you're loaning money to the U.S. federal government for 10 years for less than 1%. You've got, three risks there. You've got a currency risk because they're just going to create a bunch of currency units out of thin air and devalue the currency. So you're going to get paid back with cheaper dollars. You have default risk. There's good, now they say that the United States can't default. It very well could. And you have the interest rate risk, right? The inflation risk, and having the negative rates. It's just, if rates do go up because of inflation, you're going to get killed. The bond prices are inversely correlated to interest rates. So you're already seeing this. We've talked about it. The pension funds and institutions are moving into real assets, gold, even Bitcoin. Bitcoin now is up about 50% over the last couple months. We're seeing more of this. We're going to see more of it. And people aren't just going to sit around and, have their wealth confiscated via inflation. People aren't stupid. And when they wake up to this, there's going to be this mass exodus into these assets. Mining stocks and silver, they're still underowned. If you look at the gold-silver ratio, this gold-silver ratio still shows silver being undervalued relative to gold. Mining stocks really haven't moved to the extent that they have in the past based on the prices of gold, because people don't believe in these prices, right? So what we're still seeing now is record cash flows, record amounts of revenue from these mining companies, and they're not being stupid like they were in the past. They're paying down debt. They're paying out dividends. A lot of the dividends now are above what long bonds pay. So why wouldn't you just buy shares of Newmont, get a 2% yield, and and you've got gold, backing? And I think you're going to see more of that. As a matter of fact, Newmont broke out to a new 52-week high this week. So where are we going? He says they did some research, they did some discussion internally, some calculations, and they've tried to create a valuation model for gold. And they look at the probability of the gold price changing and how it will develop. They conservatively arrive at a gold price of $4,800 at the end of this decade. Much higher values are much more probable. And you've got people like Lee Gehring over at Gehring and Rosenzweig is saying he's calling $10,000 gold. Jim Rickards, 10,000. I don't think this is out of the realm of possibility based on the amount of currency creation we're going to see over the next. They're just going to go nuts. I think it's going to amaze everyone. And they don't have a choice. And it doesn't matter if it's Republicans or Democrats. They're not going to have a choice. I thought this was a great chart. It goes back to something I've been talking about before. Things are very overvalued in the U.S. stock market, especially around these tech stocks. And what this shows you is when certain companies, historically, this isn't just recently, they don't give the times for this, but I just pulled this off Twitter, but this is something I was talking about yesterday on a podcast I was invited to about, and then also in the video I did yesterday about Bob Farrell's 10 rules for investing about overshooting on the mean and overextended markets and how they mean revert. This is a perfect example. You're seeing like go to the left, you have like Microsoft, okay? These are times when these so-called market darlings, market leaders encompassed their valuation was 4% of the S&P or more, okay? And this is from 1990 to now. And it shows once they got above 4%, you see the line that goes all the way across. That's the 4% cutoff where that particular stock capitalization represented 4% or more of the S&P 500, and then how long it was able to maintain itself. And in each and every case, you see what happened. These things end up getting killed. These rocket ship rides do not last. None of these companies, these are good companies. Microsoft makes a ton of money. You know, General Electric is having problems. Cisco was once a market darling. Even ExxonMobil, that's been kicked out of the Dow now. The overreach, the overextended, the overvaluation, everything mean reverts. That's one of the keys you have to understand. And here's a perfect example. Now you go to the far right and you look at Apple, the current market darling, and you know, well over. As a matter of fact, it doesn't show in this chart, but it's currently the market capitalization of Apple is 7.1% of the S&P 500. I mean, we are cruising for a bruising on some of these things. And that's what I think is going to happen. You know, you're going to see these things decline. And I don't know what the catalyst is going to be, but you're going to see these things like Apple decline, and you're going to see that money rotate into value and into commodities. That's my view. But I thought this was a very interesting chart. So people want examples. Here's a perfect example. I mean, these things don't last. I mean, these things don't go up forever, and then they mean revert. And then when they go down hard. And what you're going to see is people that are true believers. You could have went back and looked on message boards and in articles, and there was justification all the way down on why you should have kept buying. You're going to see that. Okay, then the thing finally, you know, bottoms, and then, you know, all that optimism gets wrung out of the stock. Kazatomprom Q3 results, you know, draw your attention to production volumes for the 3 months ended September 30th and the 9 months ended. Down year over year in the September quarter, 23% production, and for the 9 months, 11%. If you've been following that, you know why, because of the COVID and the inability to do well field expansion and continue drilling, right? This is an extractive industry. They continually need to put new production wells in and to keep production up, and they haven't been able to do that. Here's the comments from the Kazatomprom Q3 results report. Kazatomprom remobilized employees to its operations during the first half of August, which was carried out following strict health and safety protocols to minimize the risk of a site or community outbreak. Here's the key though, right? Well field development and project activities have now resumed, though production levels for the second half of the year are expected to be impacted by the 4-month halt of mine development that began in the second quarter. Goes on to say, unrelated to COVID, but impacting future supply, Kazatomprom announced in August that it would be continuing to flex down production by 20% through 2022 compared to the planned levels under the subsoil use contracts. The full implementation of the decision to extend the reduction for an additional year would remove up to 5,500 tons of uranium from anticipated global supply in 2022, with uranium production in Kazakhstan staying similar to the level expected in 2021. So, you know, reduced supply, constrained supply, increasing demand, you get the picture. Just got to wait. Cameco Q3 comments, I selected a few of them of Geitzel's comments. You can take them for what you want. Some people like it, but I think they've become, this is about the most optimistic that I've seen them be in years in some of their comments. Geitzel says the following: I'm happy to say the company is in good shape and we're excited about the future of our industry. In fact, I would say that over the course of this year, our belief in a bright future for our industry has strengthened. Goes on to say, we also remain very bullish on the uranium market. So why is that? Well, first, around the globe, we're seeing an increased focus on electrification for various reasons. He goes on to give an example. China, for example, who has a goal to have 25 million electric vehicles on the road by 2030, recently stated that its objective is to become carbon neutral before 2060. A follow-on study from a clan of scientists in that country predicted that to achieve this goal will require an estimated quadrupling of nuclear power capacity in that country. That would be about 200 reactors for China alone, double that of the US fleet, which is currently the largest of the world. And I fully expect that to happen. And we just, the longer the price stays down, there's no new mines being built. And we have, I mean, you even saw where Rio Tinto said they weren't going to do the Olympic Dam expansion, which is a very large base metal mine in Australia that has a very significant uranium byproduct, bimetal product that comes out of that mine. They've not made a decision to move forward. They said they're not going to move forward with an expansion. We're just not seeing the new supply that we need to see. And, but demand continues to, go upward. All the news is positive. Geitzel last comment for this slide that Geitzel had that I put on here. However, on the supply side, there's some big question marks about where uranium will come from to fuel the world's growing nuclear fleet due to persistently low prices, shrinking secondary supplies, and the end of reserve life and unplanned disruptions. So I think we've got this right. We just need to wait for the payoff. We've been saying that for a couple of years. I know people get frustrated, but I mean, I don't know what else to say. All the data, all the information points in the right direction. I just don't know when the re-rating comes and when we get paid on this trade. It's frustrating, but this is the nature of this business. This is the nature of resource investing. All right, that's it for this week. Thank you for tuning in. I will, like I said, put a link up to all these articles. I will also put a link to the investment curation site that I've created. It has a lot of great videos, articles, tracking very smart people. You can get a very good education by just perusing a lot of those comments, a lot of those articles. There's a lot of wisdom there. So please take a look at that. And also, feel free to take a subscription to the Actionable Intelligence Alert newsletter, $150 a year. I think we're setting up over this decade for a tremendous bull market in undervalued resource stocks. I'm just not buying resource stocks. I'm also, the last couple selections in the newsletter have been emerging market, frontier market opportunities that have got really creamed during the COVID, but are now recovering. And, we'll go wherever the value is, wherever things are cheap. And, I have to say, there's a tremendous amount of opportunity if you make the world your oyster. So if you please consider that. And like I said, we appreciate the comments, appreciate the support. Please support the channel. Even if you don't want to take a subscription and you like the content, please comment, share the videos, and like the videos. It helps us a lot with the algorithm. Okay, guys, thanks for tuning in, and we'll talk to you next week.